Welcome to Short View Trading. It's your morning market hit for Monday, 24th of July. So if you're a swing trader of equity index futures, you want to trade S&P 500 futures or DAX futures on a 1 to 2 week basis, what should you think about? What sort of factors should you look at as you go about deciding whether to go long or short? That's what we're going to dig into in this video. And of course, the answer is you've got to think about the narrative in the market. What really matters at the moment? What is it the market's focused on? Where are the risk points? Where's the vulnerability? Coupled with what do our models say? What do the market timing 1 to 2 week models say? But in terms of the market narrative, there's a very big question out there. And that question is the following. Has the Nasdaq's momentum broken? Because clearly the Nasdaq's been an area of tremendous strength over the course of 2023, driving the market higher, particularly with the magnificent 7, the Megacap tech stocks. But did it all change last week? Was last week a key turning point? Because it was a big week for the Nasdaq. And in fact, it was a big week on the back of Tesla's earnings. We saw Tesla come out with their earnings. They beat, but actually the outlook wasn't as good as people had hoped. There was price cuts and so on. And the stock sold off hard on Thursday and again on Friday on heavy volume. And it wasn't just Tesla, it was also Netflix, which its earnings led to a sell-off in that stock. So we saw the Nasdaq 100 put in a pretty significant down day on Thursday and follow through with more selling on Friday. But of course, the critical question is, was that just a couple of bad earnings reports and a couple of bad down days, or has the momentum in the Nasdaq changed? In that context, it's pretty interesting to look at a couple of key Nasdaq specific models that we're just about to put up in front of you now. First up is the overextended model. If you look at the Nasdaq 100s and you look at it relative to its 200-day moving average, and we do that because that's a good trend line. It gives you a sense of the long-term trend in the Nasdaq 100, the 200-day moving average. So how far away from its long-term trend line has the market got? And as you can see, extremely overextended in the course of the last couple of weeks. So firstly, the Nasdaq's very overextended. Secondly, if you look at the sentiment towards the index, it's very bullish and has been bullish for a number of weeks, even a few months. And that, of course, is a contrarian sell signal. It's not a great market timing signal, but it tells you about the backdrop and the sort of general view and sentiment towards the tech sector, the Nasdaq 100. Thirdly, if you look at the amount of downside put protection in portfolios, how much of people bought put downsides to protect them in case the market sells off, there's not much at all, quite the reverse. The put to call ratio is at very low levels for the Nasdaq 100. And then finally, fourthly, the opposite of that, there is frothiness in this index. If you look at single stock call option buying, which is mostly in the tech stuff and the Megacap tech and the second line tech, you can see it's extremely high levels, consistent with markets topping out, as you can see in that chart in front of you now. So the 4 key reasons to be nervous about this market is pretty overextended, etc., etc., etc. And now this week we've got big earnings coming out, Megacap tech earnings over the course of this week. Kicking off with Microsoft and Alphabet/Google on Tuesday, Meta on Wednesday, and then Intel on Thursday. And then next week we get Apple as well. So clearly these stocks have got to deliver on their earnings expectations. That was the message of the Tesla earnings. And equally, if you look at something like Microsoft and look at how overextended it is to the upside relative to its trend line, similar to what we did for the Nasdaq 100. Here's a chart of Microsoft's 50-day moving average relative to its trend line. Big gap has opened up. And therefore, any sniff of bad news flow, slight disappointment, you're going to see that momentum roll over in Microsoft itself. So it's a big week for Megacap Tech. It's a big week for the Nasdaq 100. And if you want to trade this market on a 1 to 2 week swing trader time frame basis, you need to think about the market narrative as well as what the market timing models are saying. And that's what we dig into each and every day in the Daily Rag, also known as the Rag Trader. If you'd like a free trial, simply click on the link below, send us your name and email address. We'll give you a trial for a bunch of trading sessions, no credit card details required. And equally, if you're a subscriber, should have the email in your inbox by now this morning. So what are we watching this week? What's going on? What are the key events that we need to keep an eye on? Well, firstly, first theme is central bank meetings. Fed, ECB and Bank of Japan this week, Wednesday, Thursday, Friday, announcements on their monetary policy. Everyone expects the Fed to raise 25 bips. The question is, how does the tone of the press conference and the tone of the monetary statement appear? Is it still hawkish, or is there a bit of easing off on that and an acknowledgement of some softening of inflation? Then we got the ECB on Thursday. Again, everyone expects them to raise rates 25 bips, but the tone of the press conference from Lagarde will be critical. I'd expect she'd remain hawkish, but watch that closely. And then the BOJ on Friday, probably not interesting, but certainly a wild card monetary policy meeting over the course of this week. Second key theme is macro data, lots of bits and pieces. Some inflation out of Europe at the back end of the week, flash France and French and German inflation. We've also got some Eurozone money supply, lots of bits and pieces of US data like durable goods and employment cost index at the back of the week. And then on top of that, the third key theme is a continuation of US earnings. 150 S&P 500 companies reporting this week. As mentioned, a lot of mega cap tech stocks, but also a lot of luxury stocks. Not necessarily in the US, more in Europe, but they'll be interesting given what they've been saying in the last few weeks about talking about a bit of softness in luxury spending, which is unusual. Let's see if there's more on that over the course of this week. So that's it from us. That's your morning market hit for Monday, 24th of July. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button or follow us on LinkedIn, Twitter, and on Facebook. Thank you for listening. Stay safe. Trade well.